Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be discussing the topic of my justification for why I believe Tesla stock is worth its current share price of $2,000 per share. And as you all know, Tesla has been on a huge growth streak recently. Just over these past 8 to 10 days, it seems like we've seen nothing but growth out of Tesla. And we had a few dips here and there, but the general trend is a growth streak upwards. And just looking at this history over the past month, as you can see, it started out on this low point on August 11th. This was the beginning of the streak at a $1,374 share price. And then in the after hours of August 11th is when the growth streak really started to surge upwards. We hit like a plus 13% or something like that, then another plus 5%, then another plus 1.5, plus 1.7%, and it seems like we've just had consistent growth over this past few days with a few dips here and there, but the general trend, like I said, is upwards. So we went from $1,374 to what it's at currently, which is $2,012. So we have seen such a crazy amount of growth for Tesla recently. And with this topic, as always, anytime that there's a run-up with Tesla, I commonly see this on forums and Reddit and different places where there's usually two groups of people. And so there's that first group of people that just don't really understand any of this. They don't even understand the most recent run-up from $1,374 to $2,000. And those people are more of questioning like the justification of why did we even see this run up. They're not even really questioning should they buy at this current share price. They're just wondering about why did this happen? How does this make sense? Blah, blah, blah. You know, the typical things like that. The people that just haven't really researched into Tesla, but they're just generally familiar with it. But then there's also the other investors that are either Tesla investors themselves or people that have always wanted to get in on Tesla. And so with these people, you commonly get the question of, should I buy it at its current share price? I've always wanted to get in on this stock. Do you think this is a good time, or should I wait a while for it to pull backwards? So you commonly have those two groups of people. And with this video, I'm going to address my justification for the current share price, and not only will it be helpful for those people that are thinking about buying it right now, but it also may be helpful for those people that don't even understand a share price of $1,374 for Tesla, that are looking for reasons as to why people see so much value in this company. And so with these videos, I try to raise awareness, talk about news, and just discuss my analyses on these stocks, especially Tesla, because this is one that I've put a lot of my money into. If you take a look at my portfolio, I own 46.25 shares of Tesla, and that takes up 68.91% of my portfolio, so almost 70% of my portfolio. I recently sold some Microsoft stock and put $20,000 into Tesla stock, and that was on Friday. So even myself personally with these videos, not only am I talking about why I think the current share price is worth $2,000, but I have legitimately bought it at that price myself. If we take a look at the history of my most recent purchases for Tesla, as you can see, I bought 5 shares at a share price of $2,085.22, and then I bought another 5 shares that same day at a share price of $2,051.99. So not only am I talking about why I think it's worth the current share price of $2,000, but I can also back up that justification with my own money, in which I have been purchasing this stock at $2,000. So I hope that kind of goes along with everything here and reiterates my confidence in this stock and the potential growth for the future over especially these next upcoming 10 years. But as always, before we get any further, if you appreciate these videos about Tesla stock, please make sure to smash that like button. It really does help me out. But getting right into this, first off, let's just talk about competition and market share. And competition is a really interesting point because I think it plays a big role in the share price that we see for Tesla. Usually when we look at a share price and note that it is pretty high for Tesla, whether it's $2,000, $1,374, $1,500, I always note that yes, Tesla is at a premium most times. It is pretty expensive, but there's reasoning for that. There's reasoning why Tesla's share price is at $2,000. Now, of course, some of that is related to full self-driving advantages and different technology and different sectors of their business, but a major component of the current share price, in my opinion, is the fact that they pretty much have no legitimate competition at their level right now. So, referencing some recent news, the CEO of Volkswagen and the CEO of Audi have both said that Tesla is 2 years ahead of them and pretty much everyone else as well. They kind of addressed the difference between the growth of those two companies, in which they were talking about how Audi and Volkswagen were 2 years behind Tesla on not only the battery technology, but also the full self-driving technology and the software as well. And you can generally apply this to many other vehicle companies out there as well right now, whether it's General Motors or if it's Ford or just other companies. Keep in mind, Volkswagen has kind of kept up with the curve on this new full self-driving technology and all of these new advancements in the vehicle industry. They've been paying a lot more attention to these things than other legacy automakers that are asleep at the wheel and not really paying attention to what is happening right now. Because keep in mind, we have a lot of electric vehicle companies right now that are not willing to fully transition to EVs. They're half in and half out. And we see these examples with companies like ones that are producing hybrid cars, which are both gas and electric powered vehicles. Keep in mind that's half in and half out. And we also see companies still producing gas vehicles while also producing other models that are electric vehicles. So they're still half in and half out. And the issue with that, keep in mind, we're not even talking about Volkswagen here. We're talking about other companies that aren't even keeping up with everything as much as Volkswagen. So that's where these companies are really going to start struggling in the future as this transition begins to get bigger and bigger and bigger. As people start to transition from ICE vehicles to electric vehicles, then there begins to be a declining market for the gas engine vehicles that these legacy automakers are continuing to sell. And once they realize, as the market share starts to transition to EVs, once they realize this, I believe it's going to be too late, because at that point in time, they've already lost out on a lot of their revenue because people are wanting to buy EVs much more than ICE vehicles. And then, like I said, at that point, they're too late. And if they even want to do this transition, if they decide that it would be smart to do this transition, then they have to basically retool all of their factory production lines and things like that that are adapted to producing EVs. So that's going to be very costly. They're likely going to have to fire a lot of employees that are specialized in the gas engine vehicle areas. So they're basically going to have to revise everything from the ground up and basically eliminate anything that has to do with ICE vehicles. So at that point, it becomes very costly for legacy automakers because they didn't start out as an EV manufacturer like Tesla did. And keep in mind, all of those things are aside from the fact that Tesla is far ahead in its full self-driving technology, it's far ahead in its battery technology, it's far ahead in its software. Now, those are things that legacy automakers would have to keep up with as well, but at this point, we're just talking about the transition to electric vehicles. We're not even talking about the comparable metrics between mileage per charge and software and all of these other things. We're just talking about the general basics here in terms of competition. And like I said, Volkswagen has admitted to being 2 years behind Tesla. And keep in mind that Volkswagen is considered much better off than some of these other companies that are not even thinking of these things right now. So it's going to be a really big rude awakening for those that aren't even being aware of the situation in terms of what Tesla is doing in comparison to a lot of the other, quote, competitors. And all of this relates to the share price, because think about this. What upcoming growth company can you think of, even in the past, where you saw such a clear lead in competition, where it would take such a long time for the other competing companies just to reach where that company was at in present time? Keep in mind, there's not many companies in the past where we can think of that clearly happening, and that is the reason why this share price is at its current value, in my opinion, because at this point, you're paying a premium because we know there is no comparable competition at this point or in the near future as well. Until we are proven wrong, there is no legitimate competition at Tesla's level that can scale at their level, that can produce as many vehicles at their level, and things like that. Now, of course, we'll start to see more bold moves in the future if these legacy automakers start to wake up. But like I said, it's going to be very costly for them when they have to transition basically their whole manufacturing process from making ICE vehicles to making EVs. And those are two very different things. As we know, EVs require a lot of engineers because it's all different physics, it's all different technology and things like that. And also, with the full self-driving technology, And with the software, that's going to require a bunch of Silicon Valley type individuals, not just your typical worker in a legacy automaker plant. It's going to require, some of the top engineering minds, as we know. And that's why Tesla is commonly one of the most desired workplaces for upcoming engineers. And so this is one of the major components in the share price, like I said, because at this point, it's really difficult to look back in time and think of a company that it was so clearly set ahead that they would be successful much more than any other company because of the advantages that they had at that moment in time. It's pretty hard to think of a company that can do that. And of course, hindsight is always 20/20. So if you really looked back and thought about some of the major companies, you may think about Amazon and Apple, but it seems like Tesla at this point, this is probably one of the clearest leads I've ever seen in a sector of an industry before. So this is why so many people find value in the share price, because we're just not seeing this competition at Tesla's level right now. And we know as time goes on, Tesla continues to improve. They continue to improve all of their technology across the board. So that just keeps driving the old competition out of reach even farther. And we know Tesla is one big machine of optimization, efficiency, and doing everything possible to expedite a process and get it done in the fastest manner possible, while also maintaining quality and effectiveness. And we've even heard Elon Musk in the past talk about how they can improve manufacturing efficiency by 1,000% and up to maybe 10,000%. So that's just another one of those examples where if you reference that to what other companies are thinking right now and what the top people on the teams are thinking, unlike Elon Musk and the Tesla teams, they're probably not even considering manufacturing efficiency. And that is where Tesla really has the advantage here. And that's why people love Tesla so much, because they have come into an industry and are pretty much dominating it right now, because they knew starting from the very beginning, they knew that it had to be a focus on efficiency and doing everything in the most optimized manner. And that's why across the world in the Shanghai Gigafactories, we're seeing big numbers being pumped out for the Model 3s. We're seeing big things happening in Fremont as well with the new Gigapress that is supposed to build cars faster by turning like 70 parts all into one part just by that one press. So they're increasing manufacturing efficiency. Whereas if you compare this to other companies and factories in the world, they're not doing things like this. They're not thinking about the minute details that you can change to really improve the cost, the time, the efficiency, and things like that. So Tesla has this huge advantage on not only competition, but they're also just thinking in a completely different manner in comparison to all of these other companies. And that mindset is huge. And keep in mind, you just can't buy a mindset. This is something that Tesla has inherently had. Elon Musk has had this mindset, whereas it's pretty difficult to transition a mindset from a legacy automaker company that have just never really thought this way before. They have been complacent over these years and haven't really tried to think about any revolutionary ideas because they've held such a significant amount of the market share for such a long time that innovation hasn't really been required for them. New revolutionary ideas and thinking haven't been required for them like it has been for Tesla. From day one, Tesla had to prove itself, and they had to have a different type of thinking if they were going to succeed in this market. So like I said, the lack of competition is one big aspect of this share price. Another one is the battery technology. So to keep this short and simple, keep in mind they are operating on declining cost curves, meaning the farther they get on into the future, the cheaper it's going to be to produce batteries, the longer the batteries will last in terms of mileage per charge, and that's the advantages of vertical integration within Tesla. So basically, if you don't know, vertical integration is when a company does things in-house instead of outsourcing that manufacturing and having it being done elsewhere or simply being bought from another company. So the example here is like in the US, in which we have the factory for batteries in Nevada, in which they produce their own batteries. Now keep in mind, it's a little of a different situation in Shanghai. I think they actually buy CATL batteries from another company. The vertical integration isn't as maximized as it is in the USA, but keep in mind it's simply just easier for them in Shanghai, given the fact that they don't have factories near them producing the batteries that they can move it to. So it's basically just cheaper when you think about all the shipping costs and things like that go into it. So for the Shanghai Gigafactory, the batteries are cheaper to just buy from another company, but it's vertically integrated in the US. I think that's the case, but don't quote me on that one. But in the US, it's a different story. Like I said, they have a huge battery factory in Nevada producing the batteries. So like I said, they're operating on declining cost curves. Eventually, it's going to become much cheaper to produce those batteries at a large scale, and then it'll also be likely better batteries. It's kind of like how you have the iPhone and it gets better every year in terms of just small improvements. That's going to be similar to what we're seeing with the batteries as well, in my opinion, where you're going to see small improvements on things like the capacity, how long the battery lasts, and things like that. And I believe there was even a recent news piece about how there's supposed to be a 5% improvement on the batteries that they start putting in September. So they're slowly optimizing these batteries as time goes on. They're putting more money into research and development and things like that. And so mass scale battery production is kind of their bottleneck right now. As I've said before, Elon Musk has talked about how they need nickel for the batteries and things like that. So this is kind of their bottleneck, but once they solve this and are able to produce batteries at a mass scale, then that is when Tesla really starts to excel, in my opinion, because even companies like from the legacy automakers are likely going to have to buy batteries from Tesla in the future because of this vertical integration, because Tesla decided to be forward thinking and look into producing these batteries themselves, and because they've been able to do that with great efficiency and making high quality batteries, then now they're able to get another potential revenue source in the future by simply selling them to competitors in the future. And so they have this advantage of not only providing batteries that are vertically integrated for their own company, but they can also sell them to competitors, which is, like I said, another revenue source. So you have advantages in these aspects as well, and then you also have the full self-driving advantage. As we know, any car that is sold right now is gathering data. So basically, people are paying Tesla to gather data for them for free. So the more vehicles that get sold right now, the more data that it's able to gather to train the neural net for the full self-driving technology. So that is one of the main reasons we see Tesla pumping out the numbers right now on the cars. That's one of the main reasons we see them, instead of vertically integrating the batteries in Shanghai, they just basically buy them from another company nearby, the CATL, because they know in the short term, yes, it's not as vertically integrated as it is in the USA, but the gross margins are actually much better because, like I said, they don't have to ship the batteries from the US to China and things like that. So they can just buy it off of a local supplier, makes it pretty cheap for them, but their main goal here is full self-driving as well. So they would rather just get a vehicle sold and maybe not have the batteries vertically integrated in China, but they just want to keep on getting these vehicles sold, getting more and more out there so they can continue to gather data. So the more Teslas that they continue to sell, that just means the farther they get ahead in the data lead, because sales are what really matter if you're thinking about the full self-driving data advantage. Like I said, anyone that has a Tesla is going to be gathering data as part of the fleet, and as we know right now, Tesla has a big advantage in real-world driving data. We're not talking about geo-fenced and LiDAR and things like that. We're talking about real-world driving data and using cameras for the visuals, which is realistic because we use cameras every day when we drive, which are basically our eyes. So this is another huge major advantage that Tesla has right now as well. So like I said, these three major components, no competition, you have the battery technology, and then you also have the advantages in full self-driving technology. And then probably another major component, I would say, is the software. And that's something that Tesla has managed to excel at as well. Whereas when you think about a lot of these legacy automakers, their focus has never really been on user interface and software and things like that. Whereas Tesla, like I said, where it's just a bunch of Silicon Valley startups, they have an advantage in that as well. So they've been able to create some really good software, develop a full self-driving computer chip in-house. Keep in mind that goes along with the full self-driving thing we talked about. And that's something another company hasn't really been able to do as well, which is build a chip like that in-house. But like I said, the software is another huge advantage. And so all of these components are major things that ARK Invest talk about. ARK Invest, including Cathie Wood and Tasha Keeney, some of the most intelligent minds in the finance community, in my opinion, because they're looking at innovation, things that are going to completely change their lives over these next couple of decades. Their lifestyles are going to change after all of this. And so I like to reference those people because they're really on track in terms of their reasoning for all of this. They're talking about a bullish price target of 7,000 plus per share by 2025. And honestly, that looks pretty realistic in my opinion, because Tesla is maintaining their market share. They're not losing their market share. And like I said, they have all of these different advantages going on right now. So anyways, I just wanted to talk about some reasoning as to why I think Tesla stock is currently worth its share price right now of $2,000. I hope this video was helpful for you all. As always, none of what I said or will say in this video is to be considered financial advice. These are just my thoughts, opinions, and perspectives. But I hope you all enjoyed this video. If you did, please make sure to smash that like button. And also, feel free to check out Robinhood and Webull in the description below. If you sign up with my referral link, then you'll get some free stocks. And especially with Webull right now, you can get 2 free stocks valued up to $1,400 if you sign up with my link and deposit $100. And keep in mind, you can take that $100 right back out. So it's basically just free stocks, free passive income. But hope you all enjoyed this video, and I hope you have a fantastic rest of your week.